Happy Saturday, everybody. I hope you guys are having a great weekend. Now, I am so excited to share with you a narrative that I am seeing in the housing market. It is not being talked about nationally at all, but I do think this is a national trend. Now, obviously, I'm in Nashville, so I'm going to show you Nashville data, but guys, everybody's talking about new listings increasing. Everybody's talking about active listings jumping up significantly. But what nobody's talking about is underneath the surface. Okay, people talk about new builds and existing as if there's a dichotomy there, and there is. And people talk about price bands, more rare, but they do talk about price bands, but they don't talk about price bands within existing. And we're going to talk about that today because these are homeowners, guys. This is a group of sellers that completely skipped 2023. They're showing up in droves, and I'm going to show you what exactly is happening. It's mind-blowing. It's shocking, okay? I look at this stuff all the time and I am shocked. Now, my name's Ethan Flynn. I'm a buyer's agent. I help people buy and sell in the Nashville area, particularly South Nashville, south of 40. If you are interested and you need help, feel free to reach out, contact in the description. But I want to get into the data because I am so excited about this video. It's going to blow your mind, guys. So let's take a look at the data and then you guys decide. You guys decide. Now, we're going to get back to this price. First thing I want to tell you is Powell reiterates Fed doesn't need to be in a hurry to cut rates. Guys, Jerome Powell has no idea when he's going to cut rates. Okay, they do the dot plot. They might be right. They might be wrong. Go back and look in 2021. They were very wrong. Okay, could they be right? Sure they could. But there are inflationary pressures that they have nothing to do with that could impact prices this year. Supply chain problems, which are happening. Oil, which has been trending up. Guys, that's inflationary. Okay, so there could be products and good inflation that it's just happening. And these things could push up interest rates, okay? Even if the Fed wants to cut rates, they may not be able to, all right? The federal government debt, borrowing could push up rates. So guys, there's major upward pressure on interest rates. The downward pressure comes from recession and like this like miracle soft landing that everybody keeps talking about, like AI making everybody 10 times more productive. I mean, it's possible, right? So it is possible that rates could go down, but guys, don't bank on it, okay? Don't listen to a real estate person tell you rates are going to go down. They don't know either. Nobody knows. People in real estate need rates to go down. That's why they say it. All right, let's keep going. Real quick, I want to show you some demographic information. This is percent change in county population. Census data, shocker, Tennessee is doing dramatically better than pretty much any other state. We've now got 7 million people here. Pretty wild. Put it in perspective, LA County in California has 10 million people. The entire state of Tennessee, 7 million people. And apparently Memphis is losing people. Guys, if you know why Memphis is losing people, would you please tell me in the comments? I'm really curious. Why are they losing people? The cost of living is so much lower there. Is it FedEx? Okay, anyways, guys, look in Middle Tennessee. Okay, the biggest winner is actually Wilson County. Wilson County is just east of Davidson County. Davidson County, Williamson County, both up. But Wilson, Rutherford, Sumner, Robertson, those are the big winners. The surrounding counties outside of Davidson and Williamson, pretty shocking to see that those are the big winners. Bottom line is, guys, in the long run, massive migration inflows happening in Tennessee. That is very positive for real estate prices, even as we get into some of the headwinds. Now, this could change, right? Migration could change. All these things can change, but the trend is very positive for Tennessee, especially in the long run. Let's keep going. So high level contract volume in Greater Nashville is about flat to where it was a year ago. Okay. Now, when we look at active listings are actually exploding to where they were a year ago. We're now up 6, 7, 8%, 54.45 to 51.24. This is single family homes, but they are going up quite a bit. Now, the two counties we're going to focus on today, because I got to tell you, all the other surrounding counties, there's really not much news. They're following the same pattern, or they're down, or they're just not a very big county. But the two that we're going to look at today are Williamson County exploding, right? Look at this, 891 to 842. But just a week ago, we were almost flat. And now we're breaking out. Look at Davidson County. Davidson County is going parabolic, guys. Parabolic. Look at this. You just follow this line, this green line. This is 2024, by the way. Green is 2024. It was trending up. Now it's bending up. Now it's bending up again. I mean, this is an explosion and it is wild. And when you see what I'm going to show you next, it's going to get really interesting. Now, a couple of things I want to show you here, though. If this continues, this right here in November 21-23, this was in November 2022, we breached 2,100 active listings for single family homes in Davidson County. Now, to put this in perspective, guys, that was like a multi-year high. That would take us back to 2018. Okay. We could be past 20. If this continues to accelerate like it is, we could be past the 2,100 mark by the end of April and certainly by the end of May. Like it's probable at this point that we will be past 2,100 by the end of May unless something dramatically changes. We will be at a multi-year high. We're talking about like going back 2018, 2017. I mean, I can't go back that far. Realtrax won't take me back that far and I don't have the data, but it's very far back. This is more than pre-COVID. So keep in mind, we could be there by the end of April and likely by the end of May, we will be there. Wild stuff, guys. This is a listing explosion. This is what I hoped for last year. It didn't happen. Let's keep going. Okay, now I want to set the stage for pricing. All right, this is the median price for Nashville. And really all I'm doing, that orange line is median contract price, and the blue line is median sales price. Okay, and what Greater Nashville Realtors does is they take this and they just snapshot it at the end of every month. Okay, so this follows really what Greater Nashville posts. Okay, Greater Nashville Realtors posts. Okay, we're at 491 right now, guys. We're at 491. Okay, we are going to end the month of March in the mid 90s, 490 something. Okay, and guys, 490 something is going to put us like less than 2% from an all-time high. Now, if you look at contracts, this orange line, guess what? It just bumped up to 511. Guys, I'm telling you, I think April, we are going to see a new all-time high in prices for the median sales price. For the median sales price, we will see a new all-time high. Now, that doesn't mean every neighborhood is in an all-time high. Some of the more expensive neighborhoods that dropped quite a bit more, they've stabilized. They're maybe moving up, but they're still not at a new all-time high. But some of the less expensive neighborhoods, some of the neighborhoods in Wilson County are more likely at an all-time high now, guys. And we are going to bust through 500,000 very likely in April. It is mind-blowing, but we will be at an all-time high. Now, what happens on the backside of this? Let's take a look at this chart right here. Now, here's what I want you to know about this slide. You have people talking about new builds and existing homes. Okay, existing homes are homeowners. They're either investors or homeowners. All right, they're people like you and me living in a house, they decide to sell. All right, new builds, nobody's ever lived there. That's incremental new supply. All right, in 2023, we can see that $1 million existing active listings continued to accumulate in Davidson-Williamson all the way up to 570 where they peaked, and then they flattened out and dropped. Okay, 570, this was kind of like balancing the market. Their demand it's been healthy. Demand has been increasing for $1 million homes. So it doesn't surprise me that it balanced out and then it kind of stopped. No real forced selling, no panic selling, but prices have been squishy in a lot of neighborhoods for $1 million homes. And they continue to be, in particular, some neighborhoods we've talked about like Lad Park, but it's not just Lad Park. There's a lot of neighborhoods where there's been kind of squishy prices, never really fully recovering from the peak. Now look at 2024. Okay, 2024, we were up 27% for $1 million active listings for existing homes, guys. These are home sellers pushing the exit button, and now we're up 36%. We are accelerating into the spring for $1 million listings in Davidson and Williamson County. Guys, this is interesting. Okay, it's accelerating faster than it did last year. It's moving up faster. We're going to keep watching this. This is a dramatic move up, but it's the next one that to me is the most interesting because this is under 700,000. Keep in mind, median price is 500,000. Now this is under 700,000. This blue line is 2023. This yellow line is 2024. And the orange you can see was 2022. You can see it just parabolically exploded in 2022. Boom. We're starting to see the same trend in 2024, except we're much higher. We're almost 3 or 4 times higher than we were in 2022. So if we get this parabolic explosion in 2024, it's going to take us well past the high of 937. Now, why is this important? Because guys, starting in June with this explosion of inventory, prices started to drop rapidly in Nashville and Davidson-Williamson County. They started to drop rapidly, and they rapidly moved down before they stabilized. Really, it took 6 months to stabilize the prices, and then they've been stable ever since in most areas. 2023 was stable. But look at this, guys. Look at 2023. In 2023, we lost inventory for existing homes all the way through June. Existing home inventory was dropping for the first 6 months of 2023. This shocked me. But guess what? In 2024, that's not happening. Not only is it not happening, but it's been increasing since February, and now it's accelerating into April. Guys, we are now 9% up in active listings for under 700,000 in Davidson Williamson. Okay, that is huge, but it's not just that we're up. It's that we are in an increasing mode. As last year it was decreasing, and it's increasing, which means it's accelerating into April and May. It certainly looks like to me that home sellers that wanted to sell last year said we're waiting, and now they're no longer waiting and they're cashing out, because this is not new builds, guys. This is homeowners. This is investors. Somebody is pushing the exit button, and it's on a previously occupied, previously owned home. It is not new builds. And this is what was missing last year. And this, I believe, is why prices were so stable last year. Now, does it mean that prices will drop? I don't know. I think if this continues, prices will drop on the back half of the year. Certainly looks like they will. And it's because it's the existing homeowners. And the reason why is because existing homeowners, if they have equity, which most of them do, they don't play the games that developers play, right? Developers want to keep their prices on their new builds high, unless they're just exiting the neighborhood, like Ryan Holmes, completely stabbed some sellers some homeowners in the back. But most of the time, developers want to keep the builders, they like keeping the value of their homes high. They want to keep the neighborhoods high. They care about their reputation. And so they'll give incentives, but they won't give price drops. See, existing homeowners, they'll throw out the price just as quickly as they'll throw out an incentive. So if a home seller needs to drop their price to get it sold and they have a bunch of equity, you could see prices drop. Okay. They're much more willing, if they're going to get a big check and they start seeing houses pop up in their neighborhood and they get a little bit nervous and someone wants to buy their house, but they want it at a lower price. If they're nervous, they'll drop their price, guys. And so we could see price concessions much more rapidly than we did last year, because last year was the year of the new builds. Okay. The new builds owned the market. The new builds put pressure on existing homes, and the new builds kept prices high in the neighborhoods the new builds were building, but then they were pushing prices down in neighborhoods around the new builds. Okay. This year, it appears that existing homeowners, that's going to be the narrative. So keep in mind, guys, when you think about this, there's price band and then there's new versus existing. Here we are zooming in on the lower prices and we're zooming in on existing homes. These are home sellers massively exiting. I think it's massive because it's the largest we've seen in years and it's accelerating. To me, that's an exodus. Okay. Now, are they upgrading? Are they choosing to rent? Are they downsizing? I don't know. I don't know exactly who these people are. Are they investors cashing out, panic selling? I don't know. We're going to see. But right now, it's not showing up in the price. If this continues, I fully expect it to show up in the price. It's going to be very interesting to watch. If I'm a buyer, be patient, okay? It doesn't mean don't buy, okay? I'm not one of those like, oh, you shouldn't buy. You shouldn't be buying if you're not cash heavy anyway. But if you are cash heavy, you've got solid inbound migration. It's just a matter of being careful, asking for a discount. It's shocking to me how many buyers don't ask off on the list price, guys. You should be asking off. And if you've got competitors in a neighborhood, I mean, we were looking at a neighborhood the other day, had $18 million listings, 18, okay? In that same area, only 10 had closed in the last year. Guys, that's like almost a 2-year supply. It's a 1.5-year supply of inventory. And the listing, they were wanting too much money for the listing. And we were just like, you know what? Not going to do that. Okay. So we offered much lower. They told us that they thought we were in the wrong zip code. And we were like, well, that's fine. Doesn't hurt my feelings to offer lower. In fact, I'm very satisfied with what we offered. But the bottom line is we did that because there's a 1.5-year supply of inventory there. Okay. A 1.5-year supply. Now they can play musical chairs and maybe they're the ones that sit 18 months or maybe not. But somebody is going to be sitting on their inventory for 18 months when only 10 have closed last year. And that's the thing you got to watch out for. If you're looking at these neighborhoods and you look and you say, well, only 5 have closed in this neighborhood in the last year and there's 10 up for sale. Guess what? Potentially there's 2-year supply of inventory there. Now, it's a little bit more complicated than that, but in general, you can take a full year's of closings, and we already looked at contract volume. It's about the same as last year. You can take a full year of closings and see, if only 5 closed and there's 10 active listings, somebody's going to be sitting on their house for 2 years. They're going to take it off the market. That presents opportunity. Those are the kind of things you want to look for if you're a buyer. And if you're a seller, Those are the things you want to be aware of as well. And, really there's only a few ways to get in front of that. And so the best way to get in front of it is if you see inventory accumulating, you put your house up for sale earlier than you were planning to. And in my opinion, that's what you ought to do. But what I do know is that existing homes are on the rise. Active listings are on the rise. It's homeowners, it's investors, it's somebody. You tell me, guys, who is it? Who are these people? They owned. Are they investors? I'm going to keep digging into it. But as always, you guys teach me so much. Tell me what you're seeing. And I look forward to seeing you next Saturday.